Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a 1-year daily candle chart of the Russell 2000 index, ticker symbol RUT. And as I do each and every week, I've left my lines on this chart from the previous report that I put out last Friday. And this is more or less evidence of how accurate the technical analysis is with regard to predicting the market. And last week what I did is I drew this diagonal line lower. Again, this was last Friday right here when I drew that line, and I said that we would move lower this week, and the end of that line represents the target price at which I had forecasted again last week. So you can see that on Thursday we moved down within pennies of that point right there, and then we bounced up. So again, this is just proof that technical analysis can be used as a forecasting tool, and I encourage everyone to go ahead and at least take a little time to learn how to read the signals. So what I'm going to do this week is I'm going to erase that line from last week's forecast, and I'm going to ask that you take a screenshot of this after I draw my forecast for next week's. Again, so you can see how accurate this really is. And if you did that last week, you can see the evidence for yourself and how this worked out with regard to predicting the markets. So let me zoom in to show you what I'm seeing in the Russell 2000. This is a long shadowed candle. You see this vertical line that protrudes from beneath the red candle here. That tells us that on Thursday the sellers tried to push it lower and the buyers came back with force. Now on Friday, which is the day I'm recording this on the 20th, we had a very long green candle, which tells us the buyers came in to close the week on strength. So I'm going to take my pencil right there and I'm going to predict that we are going to move up to retest this former trend line right here. Now I'm not going to go any further than that, although I do think that we could go up to that point and pull back. But I'm predicting that next week we're going to follow that line up and then eventually bump our heads against resistance. So go ahead, take a screenshot of this, and then next week compare the chart to what you have here saved as the screenshot, and you'll see that there's a very high probability the market will move up along that line. Now let's take a look at the SPY, which is the spiders. That's the ETF for the S&P 500. And you can see that I said that we would move down to test this support line and possibly break down below that line. And again, we did that. We breached that line right here yesterday, Thursday, and then we gapped up today. Now the S&P is 500 stocks, where the Russell 2000 is 2,000 stocks. It's a more broad-based index than the Russell 2000. So I'm going to erase this line, and I'm going to forecast that we're going to do this. It's a little bit more interesting than the Russell 2000. I think we're going to come back to fill that gap. So initially, early in the week, I think we're going to pull back to fill this gap before going higher. Okay, by now you're probably thinking, well, AJ, how can you do that? No one does this. Well, I do this each and every week, and thankfully we have the most accurate record for forecasting the market, the highest percentage of accuracy in the world. And again, I challenge anyone to show me a better record. I continue to challenge. I would love to meet the person that can have better odds than what we have here. We can put our heads together and dominate the world, so to speak, with regard to predicting the markets. So I think we'll pull back, and then we'll rally in the SPY and bump our heads against this resistance. So I'm going to leave that line. I'm putting a lot of information here, but I think that this is what we're going to see. A pullback to fill the gap, a rally, and then a bump against resistance right there. So we'll leave that. Again, take a screenshot, 1, 2, 3, capture it, save it, file it for next week, and then follow along with the market guys so I can compare next week's charts to what we have right here. Okay, let's move ahead. The diamonds. This is the ETF for the Dow Jones Industrial Average. It's called the DIA. And this, again, I forecasted that we would break down below that support line. Again, there it is. I said that we would break down. We came very, very close to that low. Again, within pennies, we formed what's called a hammer pattern. Let me show you this. This is a hammer pattern right at a key support level. So my forecast for next week is I'm going to erase that line. My forecast is that we are going to rally up just like that and retest this high. So I'm going to erase this resistance right here. I'm going to leave that line in place. And you might wonder how I'm even coming with that angle. I simply go back and I look at the different angles that the market has been going through. See the previous rally that we had back here on that bullish engulfing pattern from May 6th is just that. From roughly this low, I'm drawing a more or less an angle of the trend line and to that high. So again, that's all I do is I take the parallel line from this previous rally and I'm more or less mirroring that here. Now, one of the other things that tells me that I think we could bounce here is that although the price has gone down like I forecasted from last week, we saw a drop in volume. The volume is about 40 to 45% less than what we saw on Thursday. When you see a drop in volume as prices are dropping, that tells us the sellers are easing up. And that's a signal for the buyers to come in. Now, again, I'm not looking for a major rally into another bull trend. I'm talking next week, I think we could see a bounce. So there's opportunity there for the traders. And yeah, I think I'm betting against George Soros that the world is not going to come to an end next week. And I think that we could very well see a bounce here. Now, why did I end the line right there? Because in my mind's eye, I took this high and I drew this high to this secondary high right here. Let me see if I can get that line to draw there. Okay, so I'm drawing my angles from here to here to here, and I'm projecting out. You see that? How I connected more or less this high to this high to this high. This is a short-term downward trend. So I think we could easily go up to that point, and then I think we could pull back from that. Again, a lot of information, but take your screenshot right now, save it, and you watch. There's a very high probability that this market will move exactly like I drew the lines right there. And again, it's not a magic trick. It's what I've been doing for almost 35 years. I look at the signals, I read the volume, and there's footprints that are left that can more or less tell you what the buyers and sellers are doing. Now, for the NASDAQ market, that's the Qs, also known as the power shares, I predicted that we would pull back and that we would test this support level. We did. We didn't pull back quite as much as what we did in the Dow, but we did pull back from last Friday. Now, my forecast here is I'm going to erase these lines right here. I'm going to draw a new support level because we can see that the market on Thursday bounced from this previous low, and I'm going to project that we're going to move up just like that on the NASDAQ. I don't think we're going to storm up. I think we're going to go up to maybe test this high, but I'm going to leave that line in place for you to compare next week as we forecast the market here. And this is really the lesson that I give each and every week, is to show people how reliable the charts are. Now, finally, the VIX. Volatility index is what I predicted. I said that we would bounce off that support in the VIX, and I drew this resistance line right here, and look at that. We bounced right off of the VIX, just like I said. We came right up to that resistance line right there, and now I think that we could very well pull back on the VIX and go right back down to test support. Now, why is this important? Why are we even looking at the VIX? Because remember, in the major indices, I said that we can see a short-term rally. The VIX is a contrarian indicator to the S&P. So if the S&P is, if I'm thinking the S&P is going to go higher, the VIX will drop. And this is a great leading indicator for you right here. Now, this coming Monday, which is the 23rd of May, you can join us in a free open house. It's open to the public. Just go to themarketguys.com, scroll down, and right there you'll see that there's a registration link, absolutely free. Share that with your friends, your family. Click on the registration link. You just put in some quick information. It'll send you to the GoToWebinar place that you can register and save your seat. And then Monday from 8 to 9, we're going to have an action-packed session where I'll analyze your stocks. I will answer your questions, and we're really going to have a great time. So have a good weekend. Hope to speak with you on Monday. We'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.